Hello traders, you are welcome back to the Forex Geek channel. And in this video, we are just going to be breaking down the Gopalakrishnan Range Index. All right. Well, the name is quite sound. The name is sounding quite complicated, but it's not exactly a complicated indicator. Let's just add the indicator to the chart right now. The Gopalakrishnan Range Index, exactly. The Gopalakrishnan Range Index. Now, this indicator is quite, powerful volatility indicator that helps traders assess market swings with precision, right? If you are looking for a tool to refine your market analysis, then this is one of the indicators that you might not want to miss. Okay, so make sure to hit that like button and subscribe to the channel to stay updated with more trading strategies. Okay, so now let's just quickly look at what this indicator is. You might be wondering, what exactly is this indicator that sounds so complicated? What exactly is the Gopalakrishnan Range Index? This indicator is designed to measure market volatility by calculating the difference between the highest and lowest prices over a specific period, right? So unlike fixed range indicators, this indicator adapts dynamically. So that makes it, more reliable. It doesn't mean that the indicator guarantees profit. Okay, there's no indicator out there that does guarantee profit. There's no indicator out there that is 100% reliable, right? But considering the functionality of the indicator, the fact that it tries to give signals based on the differences between highest and lowest prices over a specific period, and not exactly using the functionality of fixed range indicators, adapting dynamically. This makes the indicator quite more reliable, right, in changing market conditions, to be specific. So what that means is that a higher value, a higher value in the, a higher indicator value signals increased market volatility, which can indicate a potential breakout or reversal. Let's just look at a few examples, right? You can see that when the indicator increased in value, can you see that there was a higher volatility? Can you see that? You can see here again, when it increased in value, we had quite some volatility around this zone up to this zone, right? Before the value began to decrease. And as the value decreases, it shows low volatility or possibly a consolidation phase. Then when it begins to increase again, it shows that there is an increase in volatility. So this is a volatility based indicator. As you can see, it's giving signals based on volatility, right? Now let's come to this point and let's look at a couple of, a couple more examples. You can see that here, the indicator was increasing in value and we had some, increase in volatility again. And then here again, we had increase in volatility, around the same time that the value remained high. As this value started dropping, you can see a consolidation setting. So that's how the indicator functions basically, right? That's how it functions, okay? Now, if your strategy is based on volatility, whether you trade during high volatile sessions or you prefer to trade during low volatile sessions, this indicator can help, assist in your strategy, right? Because when you notice that the indicator value is rising, it shows that volatility is increasing, right? So you can take advantage of that, okay? While a lower value suggests market stability, making, meaning that price movements are more controlled, right? Now, how do you use the Gopalakrishnan Range Index in trading? How do we apply this indicator effectively in trading? Right, this is a very important question. So here are three key strategies that we can actually use, with this indicator. Right, the first is volatility confirmation. So if the indicator value is rising, if this indicator line is rising, it means that the market is experiencing greater price fluctuations, okay, and that could actually signal upcoming breakouts, okay. When the volatility is rising, it could signal a possible breakout. But let's look at an example. You can see that here we had a bullish trend before, right? This was a bullish trend, higher highs, higher lows, but then suddenly the value of this indicator started rising, right? As at the time when the value started rising, we had a breakout. Can you see that? We had a breakout to the downside. Now, this breakout was supported by this increase in the value of the Gopalakrishnan Range Index. So that showed that there was volatility in this bearish breakout. So in that case, it could mean that there was a possible bearish reversal happening. Even though for a while, yes, we actually had a sell move for a while, which scalpers would have possibly taken advantage of. But then, later on, we had a continuation to the upside. You can see we eventually had a continuation to the upside, right? And a series of consolidations and continuation to the upside and so on and so forth, right? But the main thing is that within this particular time frame where the Gopalakrishnan indicator range index, the Gopalakrishnan range index was rising in value, within that time frame, we had a breakout to the downside, and that breakout was supported by a bearish volatility. Okay, now you can also use this indicator for trend strength analysis. When the indicator value remains high, during a trend. Okay, now let's look for an example of a trend. Okay, a trending market, right? So when the value remains high during a trend, it confirms strong momentum in that direction, right? It confirms strong momentum in that direction. You can see that during this time when we had a bullish trend, the bullish trend was quite strong. And you can see that here, the value remained quite high. Most of the time, you can see that the indicator value kind of maintained a high position, and this shows that the trend was strong. Okay. Then you can also use this indicator, for reversal signals, because a sudden drop in the value of this indicator suggests that volatility is cooling off, right? You can see here when the value dropped, volatility was cooling off. We had kind of consolidation phase briefly around here, and then here as it dropped again, you can see volatility was actually cooling off, right? And all of that. So that could signal a consolidation or possible trend reversal. Okay. However, to increase accuracy, traders often combine the Gopalakrishnan Range Index with other technical indicators. You can actually use any indicator of your choice, but some popular ones include moving averages, just to confirm the general trend direction, or the relative strength index to filter out false signals and detect overbought and oversold conditions, and also the Bollinger Bands. These are popular options, right? The Bollinger Bands gives a clear view of price volatility and potential breakout zone. So if you want to combine, with any of these indicators, of course, you should know what to be looking out for, right? With the moving averages, you'll be looking out for trend confirmations, right? General trend directions. With the RSI, you'll be looking out for overbought and oversold conditions. With the Bollinger Band, you can get ideas with respect to price volatility and potential breakout zones. So using the Gopalakrishnan Range Index alongside these indicators can help you make more informed decisions while reducing market noise. Okay, so this indicator actually offers multiple advantages, including early identification of volatility spikes, like what we can see here, before major price movements, right? Okay, it's also effective for both short-term and long-term traders who rely on volatility analysis, and it's easily combined with other indicators to create a well-rounded strategy. So if you found this video helpful, smash that like button and subscribe to the channel for more expert trading insights. Let me know in the comments, do you use the Gopalakrishnan Range Index in your trading? Thank you for watching, and I'll see you in the next video. Happy trading.